Welcome to the Friday edition of the Tech Stocks Daily Podcast, your quick guide to the highlights and drama driving our favorite tech titans on the NASDAQ. Today we're taking you on a tech roller coaster with ACM Research making bold moves across the pond at the ROTH London Conference. Yes, the semiconductor buzz is real. Then, hold tight as we dissect Palantir's meteoric 497% stock surge, fueled by heavyweight defense contracts and geopolitical shifts. Finally, we'll peek into Apple's strategic navigation through trade tariffs with a detour production tour in India that's got everyone talking. Buckle up for insights, analysis, and a sprinkle of tech stock theater in today's thrilling episode. Let's dive in. Hey tech enthusiasts, let's dive into the exciting news about ACM Research Inc. This Fremont, California-based company has announced its participation in the 15th annual ROTH London Conference, which is set to take place at Park Lane, Hamilton Place, in the heart of London on June 25th, 2025. For those who aren't familiar, ACM Research is a prominent manufacturer known for its innovative wafer processing solutions. These are crucial in the world of semiconductors and advanced packaging applications. If you're picturing some kind of new electronic waffle iron, you're not too far off. Wafer processing takes super thin slices of semiconductor material and transforms them into the chipset superheroes of tomorrow's tech. So why the buzz about ACM's trip to jolly old London? Well, the ROTH London Conference is a major financial carnival where institutional investors and corporate bigwigs meet up. It sounds like a slow day at Downton Abbey, but it's actually the place to be if you're looking for the who's who in tech finance. At these conferences, management teams from companies like ACM get to present their achievements and future plans, engage in one-on-one discussions with investors, and have small group meetings where they can geek out about their favorite semiconductor processes. ACM Research isn't just packing sunglasses and travel adapters, they're taking a mission to underscore their commitment to offering advanced processes like cleaning, electroplating, stress-free polishing, and more. This equipment is crucial for improving productivity and boosting product yield, essentially squeezing out every bit of magic possible from each wafer. So while other tourists in London are busy snapping photos of Big Ben, ACM will be busy turning heads with their high-performance, cost-effective semiconductor solutions. And what does this mean for investors? ACM's participation means an opportunity to provide insights right in the thick of European financial activity. It serves as a grand stage to showcase their advances and strategic objectives to the European and global investment communities. If you're a market enthusiast, this type of insight could provide valuable clues about where ACM, and more broadly, the semiconductor market might head next. On top of this, ACM emphasized its dedication by stamping out legal jargon to assert their trademark rights without tedious symbols. That's confidence. It shows investors and stakeholders that ACM is assertive about their brand integrity, a sweet detail likely to resonate with brand-conscious partners. So, in summary, ACM Research rubbing shoulders with the financial elite in London is not just about fish and chips. It's about strategic networking, setting the stage for future growth, and solidifying their gangbuster role in semiconductor innovation. Expect some ripple effects, and keep an eye on how this foray into the European investor psyche pans out for ACMR, and the chip world by extension. Stay tuned, because this company has the veggies to complement any memorable semiconductor storyline. Hold on to your hats, tech enthusiasts. Palantir Technologies is once again making waves, setting the stock market abuzz. Imagine your portfolio performing a high-wire act with some firecrackers strapped on, because that's roughly what's happening with Palantir these days. Over the past year, PLTR has skyrocketed by a jaw-dropping 497%, underscored by an impressive 85% surge already in 2025. And just when you thought it couldn't go higher, it does. Let's break down why Palantir is today's star of the tech news feed. At the core of their recent performance is a timely intersection of technology and geopolitics. Palantir, known for its battlefield-grade AI tools, recently cemented a strategic partnership with Israel's Ministry of Defense. And with the current tensions simmering between Israel and Iran, the demand for Palantir's sophisticated tech solutions has spiked, solidifying its role as a key player in defense innovations. Imagine AI having a secret agent-esque moment. Exciting, right? Beyond this, Palantir's fortunes are bolstered stateside by the U.S. Department of Defense significantly upping its stake, boosting the contract ceiling on the company's Maven Smart system from $480 million to a whopping $1.275 billion. Add NATO's endorsement to the mix, and you've got a respectful nod from some of the sharpest military minds around. Financial analysts riding on data cues are intrigued as indicators such as the moving average convergence divergence and relative strength index point upwards, showcasing solid investor interest. So while the bulls cheer, let's not ignore the skeptics. Critics raise their eyebrows about Palantir's sky-high valuation, at about 587.78 times earnings, mind you. Yep, that's higher than scaling Yosemite's El Capitan. The financial tightrope is real, folks. Despite this, the long-term proposition keeps investors hooked. From AI momentum to geopolitical resilience, Palantir is more than a tech company. It's a vision of the future shrouded in unpredictability. Quite the risky, yet tempting concoction for traders and investors alike. But what should potential investors keep in mind? Yes, the upward trajectory is promising with the current ball rolling in its favor. Yet, this isn't necessarily a bet the farm scenario. Exploring deeper AI integration, and keeping abreast of global political ripples will be crucial in calibrating one's game of portfolio poker here. Whether you're on Wall Street or still buzzing this through Reddit threads, Palantir's journey is anything but dull. It's part stock spectacle, part tech thriller, and definitely not a dull moment. Who doesn't love some drama in the tech world? Today we're diving into the latest Apple saga that's shaking up the tech universe. Grab your popcorn. It's time for some high-stakes business maneuvers, all centered around our favorite fruit-named company, Apple. First up, we've got Apple making mighty waves. They're surging in sales over in China, where the iPhone has resurged to top the charts. The recovery in the Chinese market is a big win, with global sales jumping 15% during April and May. Talk about a bounce back. Could it be the tempting discounts of up to $351 on the latest iPhone models that Chinese e-commerce platforms were offering? Very likely. But hold your horses. It's not all smooth sailing for Apple. Global smartphone shipment growth forecasts are being cut. Analysts have lowered expectations for 2025 due to tariff uncertainties from the Trump era. Even the International Data Corporation chimes in with a puddle of cold water, predicting Apple's iPhone shipments will take a 1.9% dip in 2025. Oof, the roller coaster of international trade relations seems more gripping than a Netflix drama. So much for staying ahead of the smartphone curve with all that competition from Huawei. Now onto some strategic dodging by Apple. Facing heat in the form of potential 25% US tariffs on Chinese imports, Apple has been channeling a whole lot of its iPhone production through India. 97% of iPhones exported by Foxconn from India wound up in the USA between March and May. That's right, 97%. Looks like Apple's been sidestepping tariffs like a pro dancer. This slick move comes as a response to President Trump's fiery rhetoric against producing outside the United States and his explicit warning to CEO Tim Cook. Seems like Apple's caught between a rock and a hard place with Trump's strongly articulated America First policy threatening hefty tariffs on non-US built iPhones. The Cupertino giant's revenue didn't disappoint either. Crushing analysts' expectations, Apple reported a whopping $95.36 billion for the fiscal second quarter, with iPhone sales accounting for $46.84 billion of that pie. Not bad, Apple, not bad. However, despite this financial adrenaline shot, Apple shares have been in a downward spin, down over 18% for the year. So what do you think, folks? Is Apple wise to hedge its bets by expanding production in India, or should it meet US production demands head-on? What will be the outcome of this tariff drama? Are these heavy-handed geopolitical plays going to scar your favorite tech titans? Spill the tea in the comments. I want to read your hot takes. And that's the Apple Roundup for today. Like, comment, and keep the conversation alive. What's your take on Apple's strategy? You're in the driver's seat of this conversation, and I'm just the co-pilot. Let me know what you think in the comments below. All right, tech aficionados, let's dive deeper into Palantir Technologies. With their recent explosive performance, skyrocketing a dazzling 497% over the past year, the big question is, should we buy, sell, or hold? Let's break it down. Palantir's strong rise can be credited to its strategic partnerships and significant defense contracts. They signed a deal with Israel's Ministry of Defense and saw a sizable contract increase from the US Department of Defense. These moves not only bring in revenue, but also highlight Palantir's positioning as a key player in the defense sector with next-generation AI tools. If you've ever wished your portfolio came with special ops-level precision, Palantir might make your ears perk up. Now here's why I'd say hold the phones on a rushed sell order. Despite the high valuation, currently at about 587.78 times earnings, which is nosebleed-inducing, it still attracts substantial interest from investors who see it as part of a bigger picture. The ongoing demand for AI capabilities across various geopolitical tensions adds more credibility to its long-term prospects. This isn't just a tech company, it's part of a broader narrative tapping into both tech innovation and defense integration. But let's add some caution here. At such high evaluations, Palantir isn't suitable for every risk profile. A hold stance fits well for current investors enjoying this lucrative ride, but potential buyers should tread carefully, purchase in tranches perhaps, or wait for a better entry point. Keep a close eye on geopolitical developments and advancements in AI deployment, two critical elements shaping its trajectory. As always, do your own exhaustive research before making any investment decisions. Evaluate how Palantir fits into your broader investment portfolio and risk tolerance. Remember, investing based on today's tech news requires a blend of informed opinions and sharp foresight. Empower yourself with knowledge, sprinkle a touch of patience, and stay ahead of that investment curve. What a dynamic day in the tech market, folks. We've witnessed ACM Research prepping for showtime in London, Palantir continuing its dazzling defense-driven ascent, and Apple navigating the geopolitical tango with a splash of production strategy. It's a roller coaster of innovation, trade, and shifting alliances, all of which keep our tech universe thrilling and unpredictable. If you enjoyed this breakdown, don't forget to like, subscribe, and hit that share button to keep the conversation going with your fellow tech buffs. And remember, Mondays aren't all bad, especially when you've got another fresh tech roundup waiting for you here. Have an awesome weekend, and catch you next week.